From the morning reading, oil rally pulls back, energy stocks slump. The SPX moves lower as Saudi oil minister speaks. 8 of 9 sectors moved lower on Tuesday. XLU, XLP, and XLY were the strongest sectors, while XLE was the weakest sector. Oil futures fell $1.57 to close at $31.82. Breadth weakened as decliners led advancers 2.06 to 1 on the New York Stock Exchange and 2.23 to 1 on the NASDAQ. SPY, Diamonds, Qs, and IWM, which broke through short-term horizontal resistance on Monday, made the typical pullback test of the breakout on Tuesday. Each made a higher low and again closed above the 30-day moving average on Tuesday. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:11 a.m. Central Time, and I'm recording this in preparation for the trading day of February the 24th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive in, and once again, it's another one of those overnights where we had significant action. And if you look across the 4 U.S. broad market indices at the time of this cut, the S&P futures were down almost 17 points, heading towards a 1% drop in the overnight. Russell futures were down about 0.8%. NASDAQ down the steepest at 1.2%, and the Dow futures down almost 0.9%. Crude oil down big, down 3.64%. Euro down almost 0.5%. Bonds up about 0.75%, and gold, a big mover as well, up about 1.21%. So we see the safe haven places of the long bond and gold moving up pretty significantly over in the overnight, and then crude oil and others down pretty hard. In overseas action, you have mixed news. You have China up almost 1%, but Hong Kong down over 1%, Japan down nearly 1%, Germany down big, down 2.4%, and United Kingdom down about 1.3%. For those of you that follow me on Twitter, and almost 100 of you are following me already on Twitter, I've been doing this for just a little while, but one of the things I tweeted out yesterday actually has something to do with global trade. I follow about 150 of what I consider to be the best of the best in the financial markets, and I often retweet out some of those really solid research items and so forth. So if you like to get that kind of stuff, there's no junk, but I will often retweet out things that I see from these very, very good financial tweeters. One yesterday from Bloomberg Business was about how technology could unwind a decade-long trend in global trade, and it goes into some depth about how some of the things that we've taken for granted about these overseas markets could be changing. So something to kind of keep in mind there. In terms of U.S. macroeconomic reports, looking at today, we have the crude oil inventories and new home sales. Both of those will occur during the cash market open, so be aware of those times. Further, you have, and looking forward, tomorrow, of course, you have the weekly version of the unemployment claims, core durable goods, and nat gas storage. So just the normal weekly stuff pretty much there tomorrow. In terms of current market conditions, volatility has been dropping, but ticked up a little bit yesterday. Short-term VIX now up over 20, though the skew is still in a very benign level. IV percentiles also still relatively low, with the S&P at a 34, NASDAQ at a 41, Russell at a 38, and the Dow at a 34. If you look at our standard deviation moves, we indeed had one yesterday, this time a down move. In 3 of the 4 indices, we had at least a 1 standard deviation move on a close-to-close basis. So kind of keep that in mind. The other thing of note is that of the 1, 2, 3, 4, 5, 6, 7, of the last 7 days, we've had 5 of them with at least a 1 standard deviation move. So price action, while perhaps the VIX, that type of volatility has been coming down. The skew is relatively low, and IB percentile is relatively low. Price action has not been low. Price action's been for real with 5 of the last 7 trading days with a standard deviation move. And frankly, if you look over here at the Dow, we've had 6 of the last 8 days with at least a 1 standard deviation move on a close-to-close basis. So this is not a quiet kind of normal bull market by any means when you see that kind of action going on. Let's go ahead and bounce over to the charts and just see just what does that look like. We're using the futures charts today because of the significant overseas action. We'll dial in here to the most recent action. Of course, we've been dealing with a range-bound market. We now have, in essence, a triple top and a double bottom. So that's the classic definition of a range with similar highs and similar lows, limiting our range. And pretty classic coming up off the bottom with these big wicks. And yet, as we come into the resistance rollover, again, big wick, big 3 white soldiers, bull flag, up against resistance, and then come back down. We had on the S&P futures charts a dark cloud cover reversal pattern, and that is confirmed so far today with this significant down action. Remember yesterday we wondered, are we going to come back down here towards the middle of the channel, perhaps set up a higher low, or are we going to, and that could have been considered a higher low right there, but we certainly have taken that one now out. And so are we going to get a low that's down here in this channel? Or are we going to come further down and test the lows here? And I heard another trader put it yesterday that the third time you knock on the door, you usually go crashing through. So it does make you wonder if indeed, if we get back down to this 1800 level, if we don't significantly break through that level, if we do break through that level, we're probably going at least to 1760 area, perhaps 1750. And open the door potentially to something even more. So, this is pretty interesting action that we couldn't get through. Now, let's dial this into just this pattern right here. At this point, we have a very bullish short-term pattern. We have a bull flag, and we have perhaps now deteriorated into something of a sideways pattern up against this resistance area. That we would back off that resistance area is not unexpected. And indeed, one of the authors in the morning reading mentioned this. The thing is that you would expect this just to be a little bit of a pullback and then to come powering back through this, this resistance area. So right now, the short-term pattern, you have to give a slight edge to the bulls, and the intermediate-term pattern being neutral. We can't get too excited about how far this might pull back. It it's just not that bearish. It's also not that bullish in the intermediate term. So be very careful to overread anything in these reversal patterns. We are a range-bound market, transition-bound market until proven otherwise. The short term, though, is certainly our most obvious pattern, and that is relatively bullish, but that's also had some troubles as it's come into this now triple top resistance. If we do come back up and have some sort of intraday break and come back up and go through this, and frankly, I wouldn't be surprised, given the kind of overnight activity we've had of late, that this would happen in an overnight, and that we would just wake up one morning and the cash market would have to open in an area where we've already jumped the creek over this resistance and into this new area. Would not be a bit surprised at that. Now, we would need to confirm that with a close during the cash market, but that would likely be on the impetus of what would happen in the overnight. That's just one theory. We've seen an awful lot of significant overnight activity of late, and that might be the way we get through that resistance when not everybody's watching, as it were. So So right now we're looking to see how far back we go with this retracement, and then where does that then lead. In terms of the Dow, remember the Dow actually had a pretty significant confirmed breakout above this resistance area, but then also had a dark cloud cover reversal pattern and closed back into the range. And when it did that, it nullified this. So this was just a false breakout at this point, and is now confirmed that action back down into the range. So this reversal pattern has been confirmed leading into today's open at least. Now a close today will be very important, but right now the early indications is that we have a confirmed break back down on this reversal pattern in the Dow, and that breakout has been nullified. And the NASDAQ, we had, of course, we've had lower lows and lower highs, and we also had a kind of dark cloud cover type pattern and reversal sequence here as well. So short term, we had very nice reversal off the bottom, the three white soldiers, a bull flag. Intraday tickled up but did not make it to the prior resistance, and then came in with reversal pattern and confirmed down. The problem with NASDAQ, of course, and we'll see this also with the Russell, is that we're not getting as far up as we are with the Dow and the S&P, and we're making lower highs before rolling over. So we've got lower highs, lower lows, and we also have this with the Russell. And we see the same thing going on here with lower lows and lower highs. So we're watching to see if we see a change in these patterns as to indicate a broader bullish health in the overall markets. When we look at the VIX, our volatility futures, as you would expect, we've had a reversal here. So certainly nowhere near the 30 range, but notice that when we got down here, we never got to 18. The range that we look for kind of healthy bull markets is down here. We never even got close to down there. We seem to have ticked up our range, and where the floor, this new range in this more neutral at best market is operating, is in the low 20s, not in the teens. And so as we got back down to this area around 21, here we are, apparently at least in the short term, reversing that pattern. And then bonds. Bonds, of course, had the parabolic move up with the weakness that we had going into S&P about 1800. And then as the S&P went ripping up, it of course reversed. But this is a 52-week high. And indeed, if we look at this on a weekly basis, let's go there. You notice we've never been this high before on bonds as what we had just here recently. So these long bonds are certainly very, very high. We could look at TLT as well. A 52-week high, haven't taken out these prior swing highs. And right now, this pattern looks to be just simply a bull flag, or a bull flag that broke out here, a little bit of consolidation, but right now is at its highs coming up off of this bull flag pattern, and that would give you the expectation that we're going to go higher and at least to this level with this bull flag pattern. And a continuation pattern. If that goes up, that means the equities likely go down. The other place where we're seeing safe haven status is with gold, and we've had a very significant long-term trend line that has been broken on this parabolic move with gold, and has broken up significantly back down into a bull flag, fired off the bull flag pattern, consolidated a bit more, basically degraded into a flag pattern, but now with last night's activity has broken out of the flag pattern, and that would also be expected to go at least to the former highs coming out of this flag pattern in a continuation. So if you're in a gold position, you're in a strong position with the expectation that you should be able to see additional movement back at least to the former highs, if not further. So again, that's another sign that's not terribly good for the broad market, the equities. Let's go ahead and drop to our daily report. We've had a couple changes here as well. I missed it. Actually, a couple days ago, I should have gone to phase 3, which is bull flag. So while we've had this kind of pullback, the expectation is from a market term phase opinion system is that we should be in bull flag patterns. So again, don't get too bearish and too heavy with your expectation that, oh, here we go to 1800 or something like that again. That's not what, you know, all the other internals are saying about this current market. Many other indicators are saying that this is just a normal consolidation in a at least short term, perhaps in a intermediate term, if we get a breakout, that we're just basically making bull flag patterns. So something to kind of keep in mind there and kind of dampen down your enthusiasm for the bearish move unless something really starts to get going and you see that momentum and energy start to come in. In terms of IBD status, we have confirmed uptrend, though the accumulation distribution score retains that very poor D- in the S&P and the NASDAQ and E. GMI index is a woeful 2 out of 6 with the sell signal. Stock charts has not changed. Still dealing with this short-term positive pattern against the backdrop of a bearish long-term pattern. That would seem to give you more of an expectation that this is just a short-term bounce within a longer-term bearish pattern. So you see we've got something of mixed signals, and indeed when we see this stack here between the short, the intermediate, and the long term that don't agree, we get these kind of mixed signals. So overall, the consensus amongst all this is that we're a market in transition, we're in a range, and until we break out of one side of that range or another and start to see something build and stack between these time frames, it's a market in transition, and you can't make too much of either direction. Position sizing opinions are coming in at 100% and up to 75%, so relatively benign there. Intermediate term market posture is now strongly bullish with a weak bullish sentiment line. You see the S&P at a 61, the Dow at a 64. The NASDAQ is almost ready to cross that 50 line, and Russell's also coming up. So things have been getting stronger there. In terms of the specific warning areas, especially in the volatility, we did have a couple flagged yesterday. Market in decline and sharp increase both flagged off, along with the VIX futures being up over 18. Though it's important to note that this volume on this down moves have been relatively low. We've not yet had a new distribution day on either the S&P or the NASDAQ, despite a bit of weakness in the last couple days. Current week out expected move is also still in a warning status with a 52, so anything over a 40 is a little bit high, and certainly that's reflecting, much like what we said with the standard deviation moves of recent. There's been a lot of price action, though it hasn't necessarily been terribly accompanied by a lot of fear. And you see other indicators here. There's not a lot of red here. New lows, new highs, 251 new highs against 44 new lows in the New York Stock Exchange. All 5 of the key intermarket risk aversion indicators are flagged as risk on. The fear and greed index is a very neutral place and pretty much the same place as it was yesterday. In terms of special opinions, not a lot of changes here. We're still outside the acceptable window for novice traders to initiate new positions on option income strategies, though more experienced traders are certainly enjoying these higher premiums while being capable and ready with their capital and their adjustment techniques to take on those larger delta and vega moves. Cover call strategies and put selling conditions are acceptable to initiate new positions, and you should be looking in this market to increase your exposure over time as the market continues to strengthen and gain additional bullish deltas to your portfolio, and by legging in and while at the same time maintaining something of a defensive posture, using those lower beta type positions, using the more conservative strikes, perhaps legging in, using out of the money puts. All these are things that you can do to gain additional bullish deltas to your core portfolio, start building out your positions. And yet if this market were to actually break back down, and you'd still have the opportunity to maintain those more defensive setups. In terms of sector market posture, you could see for the short to intermediate term, generally pretty healthy, but certainly not across the board. The ones that are holding up the best continue to be the defensive, consumer staples, and utilities. In terms of percent change, you can see only utilities eked out a positive yesterday, and that's just barely. And that goes to our point with utilities. As a defensive sector, if the market were to go defensive, it may hold up the best, but that doesn't mean it necessarily holds up as positive. Though right now, even through the weakness we've had from December into January, it is positive across every single time frame, and being up 2.2% in the last year is actually pretty solid. And then you add to that, a couple 3 percentage points of dividends, being up about 5% in that like XLU or some similar place with utilities, spanks many of these other performances in these other sectors. So something to always keep in mind. Okay, I think we have just about gone long enough. We have hit over 20 minutes, so I'm going to just scale through this. If you see something that you like, just hit the pause button, go to that hyperlink, and get the additional details. We had a lot of information on the charts today, very interesting patterns that have been setting up, and we wanted to give you that time to understand that. One thing I will say about YouTube, if you're watching us on the YouTube channel, you could go to that gearbox and you can speed up that video. Just get that setting, go to 1.5 times, and you probably will be able to listen to this video in about 13 minutes and still understand what's going on. So that can definitely make for a very efficient method to get through this information and have the value of the information while at the same time, cutting down on the time. While you're there, hit that like, and that certainly gives us a pat on the back to continue to do this, provide this content to you each morning. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers, and then you see the hyperlink down there at the bottom for the full set of disclosures. We'll see you back here tomorrow morning with the Falcon Global Market Preview. Good trading to all.